6% range and strengthening over the last month. So you've got to get to a point where the core inflation numbers start to decelerate and labor market weakness starts to really show up in the unemployment rate before you can count on a Fed pivot, in my mind.
All right, great setup, certainly with all the data and especially that CPI print tomorrow. Gina Martin-Adams, thank you. Chief Equity Strategist at Bloomberg Intelligence, joining Mike and myself on the phone from New Jersey. All right, right now we're going to get a check on world and national news off to D.C. and Nancy Lyons. Hey, Nance.
Thanks, Carol. The bipartisan bill to provide billions in incentives to the domestic semiconductor industry is now law. President Biden says it means thousands of new jobs.
Today, I'm signing the law, the CHIPS and Science Act, a once-in-a-generation investment in America itself. A law that the American people can be proud of.
Biden says the measure was needed to maintain national security since many of the chips power our high-tech weapons. The administration says it also helps the U.S. better compete with China. As for a possible conflict between the U.S. and China over Taiwan, we're getting a better idea of how it could play out. We get more from Bloomberg's Amy Morris in Washington.
As China continues military exercises off the coast of Taiwan, American defense experts in D.C. focused on their own simulation. Experts at the Center for Strategic and International Studies say the results show that in most scenarios, Taiwan can repel an invasion, but there will be a high cost to Taiwan's infrastructure and economy, and there would be high U.S. losses because the U.S. can't conduct a systematic campaign to take down Chinese defenses without sending in forces to attack the Chinese fleet. In Washington, I'm Amy Morris, Bloomberg Radio.
Donald Trump is portraying himself as a political victim today, saying he's being mistreated by Democrats who do not want him to run for president. This is all after federal investigators searched his home at Mar-a-Lago in Florida. It's part of an investigation into whether he took classified documents from the White House when he left office. The former president was in New York during that search. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. I'm Carol Massar along with Mike Regan, Bloomberg Markets Senior Editor. Tim Stenovec is off this week. So I got to say, Mike, nothing kind of makes me a little crazy as it is in the housing market, where it's like too many houses, not enough houses, cheap houses, expensive houses. Like, it just kind of makes me crazy. But Mike McKee, who follows international economics and global policy for us here at Bloomberg, reminds us, too, that when it comes to rate moves, you start to feel it very quickly in the housing market as those mortgage rates go up.
Yeah, absolutely. I mean, not enough houses when rates are low,
right?
Too many houses when rates have risen. So it'd be interesting to see, rates have stabilized a little bit. Those mortgage rates are back down to earth to some degree. So, it's got to be a tricky time to be a home builder to try to plan your next year. Do you keep building? Do you hold back?
Do you buy land?
Yeah, right. So, as you point out in this story, it describes one home seller who's saying buyers are just trickling in, whereas, previous years they would be lines out the door, presumably.
It was like only a year ago that we were showing pictures, right, of lines around the door, I feel like. And I'm looking at home builders this year. They're down about 29% so far this year.
Yeah, I think this story especially is resonating, that home builders ETF is really having a bad day, biggest drop since June. As you asked Gina, everyone is wondering when that Fed pivot is going to come to lower rates. I think the home builders are probably top of the list,
right?
Drumming their fingers on the desk, wondering when that is going to happen.
I know home buyers who are waiting. Hey, in this story by Prashant Gopal and Katerina Soreva, says the U.S. supply of new homes relative to sales in the month of June was the highest since the midst of the last crash in 2010. By early July, buyer traffic to home builder websites and sales offices had plunged to the lowest level for the month since 2012. This is according to a survey of builder sentiment from the National Association of Home Builders. And, I think about that, and that trickles down into all the stuff that we just don't buy then.
Absolutely. It's such a huge, important driver of the economy. I read somewhere, I think it's like 3 jobs are created for every house that's built.
This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ, all lower. 23-point drop right now for the S&P 500 index. The Dow is down 88 points. That is a drop of 0.3%. But the real damage in Techland today, Micron Technology, adding to recession fears. Micron is slumping now by 4.75%. NASDAQ is down 172 points, lower by 1.4%. 10-year yield 2.79%. Gold up 0.3, $17.94 the ounce. So a down day for the Dow, the S&P, and NASDAQ. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Kickoff to the close. Bloomberg's comprehensive cross-platform coverage, bringing you insight on what to watch ahead of the U.S. market close, starts right now.
And a very good afternoon, everybody. Welcome to the Kickoff to the Close. Carol Massar, along with Mike Regan, here in our studio, our radio studio. We are joined by our TV colleagues, Carolyn Hyde, Taylor Riggs, and Katie Greifeld, to walk our Bloomberg audiences on TV, radio, and YouTube as we get closer to the closing bell on this Tuesday. And guys, I feel like we have some themes. We have inflation data that we're all looking forward to tomorrow, and some economic reports leading up to it. And then we've got another kind of disappointing report from the chip sector, some concerns again about energy in the European markets. In Caroline, it's all playing out in the markets today.
Yeah, and whether it's profit-taking was what our first key guest said, John Stolfitz over at Oppenheimer. Maybe we're just pulling away a little bit after the rally that we've had. That's why tech, of course, falls the most. Notable that some of that inflation data we got today, the unit labor costs, not looking so pretty overall. We are seeing an S&P 500 off by 0.6%. So definitely a little bit of a downdraft in terms of some of this optimism leading into the CPI print tomorrow. Volumes off by 9%, but it's tech that's hit the hardest. We're off by 1.4%, 173 points lower on the NASDAQ, and volumes actually still elevated in that part of the spectrum. Dow Jones Industrial Average off by 0.3%. We're off by 14% in terms of volumes there. The Russell 2000 also lagging, 1.8% lower, Taylor.
No longer sort of the outperformer that we saw yesterday. Love when you take us through the equity markets, Caroline. I'm going to take you through some of the key things that we're really watching as we kick you off to the closing bell, count you down to that closing bell. For me, it really does start with some of the big economic data this morning as we think about some of the big declines in productivity. Katie, sort of the biggest back-to-back declines in productivity that we've had going back since the 40s. And then, of course, what that's doing to the big surge in unit labor costs. I think for me, the note that really stands out is Wells Fargo saying that this really makes the Fed's challenge of getting inflation back down to its 2% target all the more challenging as we think about further economic data that we're watching.
Definitely a lot to chew on as we, of course, head into tomorrow's CPI report, which caught my eye. You're actually going to see, as at least it's expected, sort of a recoupling of sorts between headline and core. What that means for the Fed, someone smarter than me needs to answer.
Well, I don't know if that's me, Katie, but I would say obviously everyone is waiting for that CPI print tomorrow. It's expected to show inflation cooled from about 9.1% in June to 8.7% in July. The big question, of course, for investors is what does the stock market do after inflation peaks? And according to Luthold Group, it does pretty well. The S&P gains an average of about 16% in the 12 months after major peaks in inflation going back to 1940. There is a major caveat to that, though, Taylor, and that is that this is not a usual valuation for times of heightened inflation. We're at about a 20 PE on the S&P 500, whereas prior inflation peaks, that PE was as low as 12.7 on average. So a very different scenario this time, Taylor.
Also making a bold call that inflation has peaked as we think about some of the big declines or not that we've seen yet in the energy market, Caroline, and the way that that filters in through some of the economic data as well.
Yeah, economic data and the inflationary push has, of course, been coming an awful lot from what I'm going to shine a light on now, oil, energy, commodities. Now, there were some worrying signs, if you're looking at the oil market today, that we had a pullback, maybe 250,000 barrels is currently sent through the southern portion of this particular pipeline, the southern Drizaba. Now, message me if I'm mispronouncing it, but it does take 250,000 barrels per day, and it was indeed cut off today, we understand, interrupting that flow of gas, oil coming from, of course, Russia into Europe. But One Czech pipeline operator is saying, look, we should have it back on in the next few days. This is all to do against once, of course, about payments, about sanctions, and the inability, of course, for payment for this transit. But it's not good mood music if you're seeing, once again, a supply-side shock coming into the oil market, Katie.
Absolutely, and it's just another sort of hit to the European energy crisis as the UK deals with a very hot summer and people worry about what the winter brings.
All right, guys, I'm going to say all of this is important, but man, as Caroline said, it's all about tech today, again, dragging down the overall trade. And thank you very much, semiconductor companies, because we had Micron Technology coming out, adding to concerns about semiconductor demand overall. It's the latest chip maker. We had NVIDIA yesterday. And then, of course, during the earnings season, Intel and others warning and, reducing their outlook in terms of the coming, 6 months or 12 months. But again, Caroline, if you take a look, the semiconductor sector, Micron's under pressure. It's down about 37% so far this year. And the whole SOC sector, you can see every name in the index being dragged down today.
Lam Research off by more than 9%, Applied Materials off by more than 9%. As you say, every single member of that 30-member stocks index is in the red on the day. And of course, this speaks to companies' willingness to invest, companies' willingness to get rid of the inventory backlog as well. And all of this, whether this is a consumer side or a business in sort of focus as well, Katie.
And as we think about where the demand is, maybe it's not for chips, but it is for travel. I spoke with Hyatt Hotel CEO Mark Hoplamazian earlier today. Take a listen.
The real driver of recovery to date has been leisure travel, and that continues to be exceedingly strong. And we're seeing that persistence of demand head in through July and even the first week of August. The pace of leisure travel continues to be very strong.
Again, that was Hyatt CEO Mark Hoplamazian. Really interesting to hear him say that it's leisure travel that has been the driver of this recovery.
All right, so how do you make sense of leisure driving the recovery, and yet semiconductors, which are on everything, and everybody's talking down demand? I can't make sense of it. All right, that means we're going to have some more conversations, folks. We'll be back in less than an hour's time.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week on this Tuesday. Carol Massar along with Mike Regan. A lot jammed in there. So I hope you guys all kept up with it on radio and television and on YouTube. But it's just a point of there's a lot going on, and we're just coming off of earnings. We have a big earnings report, right, Mike, tomorrow, Disney, but trying to make sense of kind of the cross currents.
It's funny, everyone goes on vacation in August, but the news, the data, the market action doesn't stop, and it can be some of the more interesting times of the year.
It's pretty amazing, right?
Yeah.
Like it used to be really quiet in New York. It's not anymore. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening and watching Bloomberg Business Week on this Tuesday. Carol Massar along with Mike Regan. Mike, we're going to talk about in just a moment one of the most read stories on the Bloomberg. It has to do with former President Donald Trump.
Yeah, maybe people have heard about this incident. I don't know. Do you think?
Maybe. I don't know. It's just been all over social media since last night. Okay, we're going to get into it, though, in just a moment. First up, though, let's get back to the markets and the trade. Here is Charlie Pellet.
Hi, thank you very much, Carol Massar. Here's what's going on. The Dow, the S&P, NASDAQ, all retreating right now. NASDAQ 100 as well, full of tech names. That's where the real damage is being done today. Also, we've got the Russell 2000 declining, so let's begin with the Russell 2000, down now by 1.8%. NASDAQ 100 index is down 1.4%. The NASDAQ Composite Index also down 1.4%. S&P tumbling now by 27 points, down 0.7, and Dow Industrials down 121 for the Dow. That is a drop right now of just about 0.4%. So stocks are retreating as a downbeat outlook from another giant chip maker, Micron Technology, adds to recession fears, with traders potentially unwilling to pile into riskier assets ahead of tomorrow morning's inflation data. 10-year yield now 2.79%. Spot gold up 0.3%, $17.49 the ounce, while West Texas Intermediate crude oil, WTI, is trading lower now by just about 0.4%, $90.37 for a barrel of WTI. Focus is turning to the question of whether the Consumer Price Index may have peaked in June after a blowout jobs reading eased worries about a recession. Anna Hahn is equity strategist at Wells Fargo Securities.
If it comes in hot, if CPI, particularly core CPI, surprises the upside, for us here at Wells Fargo, we expect a little higher than consensus, but even higher than that, I think you're going to get, again, these recession fears stoked.
Micron Technology, the largest American maker of memory semiconductors, said fourth quarter sales may come in at the low end or below its previous guidance. Micron now down by just about 4.5%. Novavax shares are plunging, losing a third of their value after the drug maker slashed its 2022 revenue forecast as demand for its COVID-19 vaccine, which trailed competitors getting to market, failed to live up to expectations. Novavax plunging now by 30.8%. Again, recapping red on the screen. The Dow, the S&P, NASDAQ, all lower. S&P down now by 27 points, a decline there of today of 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, social media news sites, man, they lit up last night on the news that former President Donald Trump faces intensifying legal and political pressure after FBI agents searched his Florida home in a probe of whether he took classified documents from the White House when he left office. You've probably read the story. Well, that story, it is among the top 5 of today's most read stories on the Bloomberg. For more and understanding a bit about the legal aspect of this story, let's bring in Bloomberg News senior reporter Zoe Tillman. She is on the phone from Washington, D.C. Zoe, good to have you here with Mike Regan and myself. So what do we need to understand about the legal process and justification initially for that search at Mar-a-Lago?
Right. So, the critical thing here is that to get a search warrant, to get a judge to sign off on a search warrant, you don't need to show that a particular person committed a crime. This isn't the same as, charges against the former president. What they have to show to a judge is that there is probable cause that they will find evidence of crimes at the location. A big question for all of us is what exactly the search warrant says. Prosecutors would have to identify which federal crimes they think they would find evidence of, and that would give us a big clue into where the investigation is headed, who it's focused on, what the potential charges might be, and what the potential penalties on the table might be. It's a very big unresolved unknown at this point. But it's not as if the Attorney General or the head of the FBI woke up one morning and said, let's go raid Trump's house. They had to bring something of substance to a judge who had to meet, preset standards for signing off on that.
Zoe, I'd love to sort of tap into your expertise and experience covering court cases like this, because there are so many various investigations into former President Trump. Most of the reporting seems to indicate that this was focused squarely on the removal of documents from the White House and taken to Mar-a-Lago when they should have gone to the National Archives. But I wonder, given all the other investigations, is it possible that evidence pertinent to those could be used from this search? Or does it all depend basically on what the warrant says? What all can they take away from Mar-a-Lago that could be used in other investigations?
Right. So, when they go in with a search warrant, they cannot just do a free-for-all look for any evidence of a crime. They usually have to specify, we are looking for White House records with classified markings, or, any evidence boxes marked classified, or these are from the White House. But once they take those documents, if in the course of the search they see, I think that the phrase is sort of in plain view, but that can mean a lot of different things in practice, other evidence of crimes, that can be fair game for investigators to use, even if it's not related to the original purpose of seeking the warrant. So the classic example is, FBI agents go into a house on a search warrant for, looking for guns, and on the table they see drugs. Those drugs are fair game. It's a bit more complicated when you're talking about, the contents of a document that's been seized pursuant to a search warrant related to some other incident with kid gloves. They would try to get whatever they need through other means that are not, a very dramatic execution of a search warrant, quote unquote, raid of a home.
Reporting, and I'm sure coming back to you. Zoe, thank you so much, really setting us straight in terms of the legal side of this to get a better understanding. Zoe Tillman, senior reporter. She covers legal issues and courts out of D.C. for Bloomberg News. She's joining us on the phone from the nation's capital. All right, we're going to stay there, head back for an update on world and national news with Nancy Lyons.
Thanks, Carol. Saying it is a once-in-a-generation investment, President Biden has signed the bipartisan CHIPS measure into law. He says those chips power just about everything these days, so making the investment now is essential.
We are better positioned than any in the economic competition of the 21st century.
Biden says in addition to offering incentives for semiconductor manufacturing, the law also earmarks federal dollars for science research and development. Well, Micron is wasting no time in announcing that it is making a $40 billion investment to build semiconductor chips here in the company today announced its investment will last through the end of the decade, despite signs that the demand for chips is now falling off. Tennis great Serena Williams is saying goodbye to the sport that gave her so much. The 40-year-old 23 Grand Slam singles winner penned an essay for Vogue magazine that came out today where she announced she would be leaving the game. Competitive match in more than a year at an event in Toronto recently where she seemed to hint to reporters that retirement might be near.
There's just a light at the end of the tunnel. I don't know. I'm getting closer to the light. Can't wait to get to that light.
I know you're joking, but can you...
I'm not joking.
Okay, so then explain to me what the light is to you, what the light represents.
Freedom.
Williams says she did not want to choose between her career and having more children, but says something had to give. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. So I talked a little bit with our TV colleagues, right? We highlighted what's going on in the chip sector. It's another day, another big chip company warning about, and it's not just maybe supply chain problems or something, but it sounds like another sign of collapsing demand, which makes me a little worried, Mike.
Yeah, yes and no.
No?
Well, the semiconductor industry is just so boom and bust. It's almost like the oil industry. Prices rise, everyone produces. They oversupply the market.
No, you're right.
And then it snaps back. So I think coming out of the pandemic, we're seeing that effect almost on steroids. There was such a shortage of chips over past 2 years that a lot of manufacturers just sort of hoarded them, stockpiled them. Now they're working down those inventories. So it is a troubling sign. I think if it's confirmed by, some other evidence of a slowdown in consumer and business demand. But I do think you have to always sort of hold out the possibility that this is just a boom and bust type of business.
All right, so I am going to tease that we're going to hear from the Micron CEO in our next simulcast with our TV colleagues at the top of the hour, where he does kind of cover a little bit of everything and kind of adds to the argument that maybe there is some demand weakness. But I do wonder how much of it is companies who bought tons of semiconductors and chips to really stock up on inventory. Now they're working them down. CEO, you got to take them at what they say, though, right?
Yeah, it is. There was just such a shift in the consumption of chips. It went from going into cars and everything else into very much a focus on consumer electronics, the video game systems, your iPads, everything that everyone stocked up on to get through the pandemic. And now we're definitely normalizing the other way. So I'll be fascinated to hear the CEO.
You don't buy it, do you? I can tell. No, you do, right? Because of the boom and bust.
I just think that's an element of it that it's hard to separate which is what driver, but certainly the CEO knows it better than me.
Well, we'll hear from him in the next hour. Anyway, something we're certainly watching.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are bouncing along the bottom right now. We have got the Dow, the S&P, NASDAQ all in the red on this Tuesday. S&P down now by 22 points, down by about 0.5%. Tech gloom hitting stocks. We've got the Dow down 94 right now, a drop of 0.3%. NASDAQ down 163, lower there by 1.3%. A downbeat outlook from another giant chip maker, Micron Technology, adding to recession fears. Micron, by the way, is down now by 4.4%. Traders potentially unwilling to pile into riskier assets ahead of tomorrow morning's inflation data. Complete coverage as that number breaks. And of course, reaction 8:30 a.m. Wall Street time. 10-year yield 2.79%. Spot gold up 0.3%, $17.93 the ounce. West Texas Intermediate crude down 0.3%, $90.45 a barrel. Domino's Pizza says arrivederci to Italy. The last of Domino's 29 branches there have closed after the company started operations in that country 7 years ago. It borrowed heavily for plans to open 880 stores, but faced tough competition from local restaurants offering pizza in Italy. I'm Charlie
That's
Pellet.
a crime.
It
Come
is
on.
unbelievable, right? Unbelievable.
Are you kidding me?
Yep, exactly. That said, I like Domino's.
No, nothing against Domino's, but come on.
I know. It's just the whole idea of the
You're in
business
Italy.
model there. Yep, exactly.
You got to push the button, Mike.
It's like it's like bringing sand to the beach, as my mother-in-law would say.
Right? Like, oh, come
Trying
on.
to sell Domino's in Italy, selling ice to the Eskimos.
It doesn't make sense. All right, Charlie Pellet, thank you so much. You are listening and watching Bloomberg Business Week on this Tuesday. Carol Master along with Mike Regan. Tim Stanovic is off. All right, so we've often talked about Meta Platforms, the company formerly known as Facebook, getting beaten up by investors, down about 50% this year alone, down from its all-time high back in September of 2021. Well, as Bloomberg Business Week columnist Max Chafkin writes, despite Mark Zuckerberg's attempt to present Meta as an underdog, Max says it's not time to feel sorry for the social media giant. So let's get to it. This story on the Bloomberg and at Bloomberg.com/businessweek. And Max joining us on the phone from Queens. So Max, why shouldn't we feel sorry for Meta?
So what's happened over this year basically is the economy and kind of the social media ecosystem is sort of reverting to pre-COVID norms. So there was this moment, in late 2020 and 2021, people were spending all of their time on the internet, spending huge sums of money on, online shopping. And that was amazing for Facebook's business and, Meta's business. And what's happened is we've seen a reversion, which has led to, all these kind of like doom and gloom predictions, both from inside the company and from analysts. The thing is, the pre-COVID version of Facebook was still dominant. And when you look at the competitive landscape, yes, TikTok is gaining ground in terms of cultural mind share. They do have a lot of young people on the platform, but it's not even close. Facebook still basically owns social media, and that isn't changing anytime soon. And I think what's happening more is Zuckerberg is attempting to position the company both because it's in this antitrust conversation and as a way to, of course, get more productivity out of his employees to sort of try to find ways to, to continue to stay ahead of TikTok.
Max, the other big story, obviously, with Facebook is this pivot to the metaverse. Why we're calling it Meta now instead of Facebook, and why I can never remember the ticker symbol for the stock. But I wonder, it just seems like there's been nothing but criticism about that strategy. And, surely part of that big investment in the metaverse is reflected in this just awful stock price performance this year. I'm wondering how you're thinking about that, though. Is it possible that is an underdog story? I mean, is Zuckerberg seeing something in the metaverse that everyone else isn't, or is this just a quixotic campaign that he's going to regret, do you think?
Well, I think Meta, Facebook, already controls a lot of the metaverse. They acquired this as part of their sort of push into VR, into new platforms, right? They paid around $2 billion for this company called Oculus. That turned into Facebook, Meta's, VR, AR thing. And the question is, how big does this market get, right? Zuckerberg is spending billions of dollars and rebranding the company and so on with the hope of a big platform as big as mobile phones or something like that. But we don't actually know that that'll be the case. So in sort of the best case scenario, this becomes huge. It's as big as PCs, and that's the vision that Zuckerberg has talked about for years, really. The worst case is Facebook just controls a relatively small market and then continues to dominate social media as it does today.
I mean, it's still a $451 billion market cap company. I mean, it's
not too shabby.
It's exactly. And I think about, there's so many companies when we talk about the law of large numbers. I mean, you're looking at revenue still for this year forecasted to be something like $118 billion. I mean, this company still makes a lot of money.
Well, and one thing that I think people have sort of missed is there's been this conversation like, oh, maybe Meta, Facebook has lost its cool, right? The young people are going to TikTok. And what it's easy to forget that has been going on for basically a decade. It was about a decade ago that Facebook first lost its cool, maybe a little bit earlier than that. And Zuckerberg has found ways time and again to adjust, and originally that adjustment meant buying Instagram and then copying aspects of Snapchat, buying WhatsApp, and we're seeing that play out again. He can't buy TikTok because of antitrust scrutiny, but he can copy it, and the company is making progress there. It hasn't yet found ways to generate revenue, but these TikTok-like products are definitely gaining in terms of users, time spent, and that sort of thing.
Yeah, Max, I'm wondering, a lot of times when you see a company sort of stumble like this, at least its share price and sort of not posting that blockbuster growth like Meta once did, I would start wondering about the guy at the top and his, how secure his position is there. Obviously Zuckerberg is both CEO and chairman of the company. Is it just insane to think that there could be some risk to him in that position, or is he just so ingrained in the company that it would be foolish for anyone to try to agitate to have him either removed completely or at least give up one of those two titles, chairman and CEO?
So, I mean, he would have, the important thing is he would have to do it, right? He controls Facebook in addition to being, the CEO and the chairman through these super voting shares. So he would have to conclude, or I guess suppose like be forced by a court or something, that this would be, better for the company. And I don't think that's going to happen anytime soon. And that's partly because of my sense of the psychology of Mark Zuckerberg, right? Like this is his identity. It's very hard to imagine him not being at the top of Facebook. I think it's probably very hard for him to imagine that. And I also think, the company has kind of found, I don't know if you call it a scapegoat, but in terms of executive changes, right? Sheryl Sandberg is moving on, and she was some of the focus of some of the criticism around Facebook. So I think he has made some executive moves at the top in response to pressure, but I don't think one of those moves is going to be removing himself anytime soon.
So the point is that and I think about as we talk about this story, and you're right, I feel like some of the conversations around it is like, oh, woe is, Meta. But I mean, this is a company still, even if numbers maybe, or the growth numbers aren't as strong as they used to be. I mean, when it comes to things like advertising, I mean, this is still where folks go. And we've just got about 30 seconds here.
Yeah, it's unavoidable from an advertising perspective. And I think it's just worth keeping in mind that there's this political story playing out at the same time, which is that Facebook is under scrutiny and it's to its advantage to play up competition. So I think it's important to, just take it with a grain of salt every time they talk about fear of TikTok and so on.
Somebody managing the message, the narrative, Max? Is that what you're saying? I think he's gone. All right. Anyway, check out this story. You can find it on the Bloomberg and, of course, online at Bloomberg.com/businessweek about Facebook and Mark Zuckerman. Of course, that was Zuckerberg, excuse me. That, of course, was Max Jafkin, columnist at Bloomberg Businessweek, joining us on the phone from Queens, New York. You are listening and watching Bloomberg Businessweek. Carol Master, Mike Regan, and this is Bloomberg.
close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, just 60 minutes left in your trading session. Caroline Hyde, Taylor Riggs, Katie Greifeld, joined now by our colleagues Carol Massa and Mike Regan, in for Tim Stenovic. And we are together welcoming across our audiences of TV, radio, YouTube, everyone in to discuss what is, well, profit-taking or risk sentiment turning sour, but everyone on tenterhooks ahead of that all-important CPI number.
Yeah, we'll be focused right 8:30 a.m. Wall Street time tomorrow. In the meantime, though, we continue to see tech really dragging down the overall trade. And once again, it's semiconductors at play. Micron Technology warning that sales may come in at the low end or below its previous guidance as customers scaled back on their own inventory. So you've got Micron down almost 4% in today's trade, and the Philadelphia Semiconductor Index, I think all names continue to be down in today's trade, and that index is down more than 5%, Mike.
Yeah, Carol, also a pretty nasty day for home builders. I think maybe that story about a glut of supply of new homes weighing on the industry today. If you look at the XHB, which is the S&P home builder ETF, down about 3.5%. That's its worst drop since June 16th. Remember, that was the low of the market in the middle of June. That home builders index had actually rallied back 20% since then. So a sort of rethink going on right now, Caroline, about the prospects for home builders given this sustained volatility in rates market.
Yeah, maybe music to some new buyers' ears, at least, if there's a glut. But I don't feel that we're suddenly going to start finding a rebalancing in the new homes market. Meanwhile, the S&P 500 off 0.5% on the day. We are seeing a 19-point downdraft in one of the major benchmarks. We are seeing volumes off as well, but we're currently seeing the Dow Jones Industrial Average also off by 0.2%. The NASDAQ is where a lot of the pain is being felt. Big tech, as you were saying, Carol, all about those chips today, 155 points lower, and volumes actually up on the day by about 16%. Russell 2000, though, again, interesting that this had been your outperformer, but both big tech and small cap moving downwards, and it's off by 1.6%.
And you really see that today. As we saw yesterday, we continue that narrative today. Katie, it's big tech that drags everything down. On a sector level, the tech sector within the S&P is off an additional 0.7 to actually now about 1% or so on the day. So you still do have some sectors in the green, but it's really those big heavyweights that continue to drag this market lower.
And of course, one of them is Micron. We all know the story. Micron sounding alarm on a pullback in chip demand, warning that fourth quarter sales expected to be at the low end or below previous guidance. You can see that's taking a bite out of Micron shares and really the broader chip industry as well. You can see Lam Research falling even more, almost 8% there. I wanted to put in some good news, though. We have Nielsen, for example, rising by quite a bit, over 21% after Elliott and Brookfield near deal with Dissident to acquire Nielsen. Shareholders seem to like that. And finally, Occidental. This is interesting. Berkshire Hathaway continuing to buy, now has a 20% stake in the company that's clearly causing shares to rally today.
Meanwhile, I'm going to be more doom and gloom, perhaps, and talk about how index shorts are at, well, the most since 2016 on the S&P. This is a great chart coming from our charting team experts, and they line up where we are in terms of overall shorts in the market and also where we are in terms of overall sentiment, sort of the bull-bear spread that we see on the AA. And we are seeing actually the most amount of shorts since 2016, as I say. However, is that a contrarian buy signal? Is it now that we see so-called sort of the washout that many had expected in terms of sentiment, and now that buyers come in, Carol?
Yeah, I kind of like it when it gets negative. I feel like then everybody's on guard, and then it tends to go in the other direction. All right, we've been talking a lot about Micron Technology today, and of course, this is one of the laggard and taking down the overall semiconductor industry today. Well, on Bloomberg TV earlier today, the team caught up Lisa Abramowitz with the company's CEO. We're talking about Sanjay Mehrotra speaking with Lisa, and they talked about the current supply-demand imbalances. Here's what he had to say.
Due to the macroeconomic uncertainties, as well as due to high levels of inventories that customers have built across various end market segments for us, those inventories are being adjusted down, and that is what is resulting in reduced demand for us.
And that's Sanjay Mehrotra, the CEO of Micron Technology. What's interesting, and Mike and I have been having a discussion in terms of what's going on for semiconductors, is this just companies who bought a ton of chips and now customers are just working down their inventories, or is there some real demand problems, which speaks to something more broadly about economic problems globally, Mike?
Yeah, Carol, just traditionally such a boom and bust industry. I was saying, sort of like the oil industry, you know, they tend to oversupply when prices are high, then there's a glut on the market and they trim back down. So I think it's pretty hard to sort out the macro signal from sort of the individual micro story there, Taylor, as far as the CEO just pointed out, companies had stockpiled chips, almost like the rest of us stockpiled toilet paper during the pandemic. Manufacturers were stockpiling chips. So I think we have to see some of those inventories get worked down and see what the real sort of macro signal is from those chip makers, Taylor.
I really like that you remind us of some of the double ordering that we continue to hear about across the sector when we were wondering, was it all demand or were companies indeed, like you said, not just the chip makers, but everyone really stockpiling to get ahead of future supply chain issues? Then the inventory glut that follows, and then the discounting, and hopefully, Katie, the deflationary aspects that come from that discounting. Again, as we bring it full circle and push forward to CPI tomorrow.
Which, of course, is, you know, sort of the Kathy Wood argument that you have this big inventory glut that's going to be disinflationary, whether, I don't know, we are past the peak, maybe at the plateau of CPI. It doesn't feel like anyone is necessarily worried about disinflation at this point, though.
I mean, it was notable that, of course, the CEO was out there in the White House, and that's because of the signing of the CHIPS bill and the fact that we are getting this $52 billion going to the overall sector to try and bring it home, at least production here to the United States. This was an industry that didn't want to be boom and bust anymore, told us, tried to persuade us that it wasn't going to be that, and the demand was going to be resolute because they're going into data centers and industrial and automotive. But at the end of the day, we still have the haves and the have-nots. Some parts of the supply chain are still difficult. The car sector, for example, that's what's inflationary. And then other parts, well, we're certainly pulling back on all our spending in the PC world.
Well, and you talk about the CPI report tomorrow, and of course it is our focus at this point, and we've really got to watch the components. Like we know energy, food, right? These are things, energy has come down dramatically, so we would expect that to be somewhat helpful when it comes to the inflationary picture, but we've really got to go through all the different components tomorrow, Mike, to get an understanding of where those continued pressures, and if it's broad, that is something that's going to get the Fed's attention.
Yeah, absolutely, Carol. And obviously, we've all been looking at that drop in AAA gas prices, the average retail price nationwide. I got to say, though, if I look at the futures market today, September New York gasoline futures, they're up about 9%, almost back to $3 a gallon in the futures market. So something to keep an eye on, Carol, to see whether this drop in gas prices can be sustained.
You're saying gas prices are going to get higher?
We'll see. We'll see.
It's not a straight line on any of this. All right, guys, we're going to be back in less than an hour's time. We're going to count you down. Our cross-platform coverage, radio, TV, YouTube, Beyond the Bell. We'll count you down to the close on this Tuesday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week on this Tuesday. Tim Stenovic is off. I'm Carol Masser, along with Mike Regan, who follows the markets, Bloomberg Senior Markets Editor here. And it's interesting, Mike. I feel like as we go through, I don't know, you and I have seen a lot of market cycles. A lot of folks here at Bloomberg have seen a lot of market cycles. As you remind us, whether it's chips, whether it's energy, there are booms and busts. Things go up. Same thing with, pick your asset classes, right? There are just times where we're seeing investors rushing in, pushing everything higher, and then it comes undone.
Right. And then it comes back together again, like the meme stocks. Who would have thought that we'd be talking about them?
What do you make of that? As you watch
it's so hard to say. It's like someone flicks a switch and everyone's sending the meme stocks up 1,000,000% again. I don't know. Maybe someone posts something on Reddit and that gets it done. I don't know, but it's
you just
it's
want me
wild.
to talk about Bed Bath & Beyond. It's down 19% today after gaining 40% yesterday and 32% on Friday.
It almost doubled in the course of a week. And, go figure that one out. I don't know. Put that up to your Finance 101 professors at college and try to explain that one. It's eye-popping.
Right, it is. And it's just maybe a sign of the times and individual investors maybe having some fun. I always do wonder about the institutional trade that maybe gets behind it. 42% though of the float is shorted.
Wow. Well, that explains a lot of it right there. It amazes me that someone would be the 42nd percent short. If you already see it at 40%, 41, I'm going to steer away from that. Yeah.
All right, folks, more on the markets to come. In the meantime, let's get back to world and national news and Nancy Lyons. She's at DC. Hey, Nance.
Thanks, Carol. Donald Trump faces intensifying legal and political pressure. After FBI agents yesterday searched his Florida home, a federal judge had to sign off on the search warrant, which University of Michigan law professor and former U.S. Attorney Barbara McQuaid says is significant.
That judge would have had to review a detailed affidavit explaining why the federal agent believed that there was sufficient evidence to establish probable cause to believe that a crime had been committed and that evidence of that crime would be found at that location. And then, and only then, once that judge had issued that warrant, would it have been executed as it was yesterday.
Barbara McQuaid tells Bloomberg a search warrant is usually only issued when repeated requests are ignored. The FBI search of Mar-a-Lago comes as former President Trump is giving very strong hints that he's running again in 2024. Brown University political scientist Wendy Schiller says it could energize Republican base voters this November.
This can have a big effect, as the FBI, we know, in the last couple of years has had on elections. Midterm, short term, good for the Republicans. Long term, for Trump, for 24, you got to say it leans towards the bad for Trump and good for people like Ron DeSantis or Kristi Noem or Kim Reynolds, any of the other people who might be thinking about running.
Again, Brown University's Wendy Schiller. Wisconsin voters today are set to formalize Democrat Mandela Barnes and Republican Senator Ron Johnson as the contenders in a pivotal general election battle that will help decide control of the Senate for the next 2 years. It's just one of the primaries underway today in 4 states. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, because we're all about doom and gloom, and Mike and I were talking off air just how hot it is. And, you know, I remember growing up, you'd have like a week or two, maybe in July, like late July, where it was really hot and mom and dad would gratefully put on the air conditioner. But for the most part, you didn't need it. Well, there's a story on the Bloomberg that talks about what's going on, Mike, specifically in Europe.
Yeah, absolutely. Another bout of extreme heat and dry weather set to sweep Europe. UK Met Office warned of extreme heat in London from August 11 to 14. And just what a wild year in Europe for weather, completely, you know, and it has so many sort of add-on implications with the crop supply and the fruit supply. I mean, do we have to start worrying about the French wine supply yet? I don't know.
Well, actually, Business Week has done some stories.
Yeah.
And I think the Terminal has also done some stories, some of our Bloomberg News team, about how it's shifting in terms of where they might be producing. But they're also, in some cases, being able to go to different areas that were too cold that are now a little bit warmer, so they're shifting it around. But in a nutshell, yes.
I mean, I know my garden this year is a mess. It's like the Dust Bowl.
Is it so dry?
Oh,
Like-
it's terrible, yeah.
Well-
All that time spent weeding, and I think I've got like 2 tomatoes out of it so far this year.
Well, we were kidding too that like when it rains, I get home and my family's like, you know, it was pouring and there's no sign of it because everything's dry. We do want to say in Europe, though, the forecast cap a summer of extremely high temps across Europe, and they've been damaging infrastructure, raising the risks of droughts as the effects of climate change kick in. France registered the driest July on record. England, the driest in almost 90 years. Water levels on the Rhine River, vital artery for the transport of commodities and industrial goods, are so low that trade is at risk of coming to a halt on some sections of the waterway. And that speaks to what you were talking about.
Temperatures are expected to reach mid 30 degrees Celsius on Friday across southeast England. I don't know, Carol. It never sounds as bad in Celsius. Mid 30s. It sounds.
How about 94.1 in Fahrenheit?
There you go.
That's pretty hot. But there are implications, and as Mike said, it's, you know, now energy crisis also means maybe we're coming for food, and that's going to have implication as well. Lots on the Bloomberg about this.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 43 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ. They are all lower right now. S&P down 18, a decline of 0.5%. Dow Industrials down 79 points, a drop now of 0.2%. NASDAQ down 146, a drop there of 1.3%. Well, a day ahead of CPI Wednesday, we have got tech stocks leading the declines. Micron Technology adding to recession fears. Right now, Micron is down 3.5%. Comments this morning about demand. Yesterday, we heard from NVIDIA. NVIDIA shares down now by 3.6%. The S&P is lower by 18, down 0.5. The Dow is down 78, down 0.2. But the real damage, as I mentioned, with tech stocks, NASDAQ 100 index down now by just about 1.1%. NASDAQ Composite Index down by 1.15%. 10-year yield 2.79%. Spot gold is up 0.4%. Gold at $17.95 the ounce, while West Texas Intermediate crude flat on the day, $90.77 a barrel on WTI. Again, recapping, red on the screen. S&P now down by 18 points, a drop right now of about 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, another one of our most read stories on the Bloomberg today, it has to do with college endowments posting their biggest losses since the financial crisis. So let's get the story from Bloomberg News higher education finance reporter Janet Lauren. She joins us in our Bloomberg Interactive Brokers studio. So good to have you here. So what's going on?
Well, given what was in the stock market for the year, the S&P was down 12%. Not a huge surprise.
I've seen my 401k. I know.
So I think what is surprising is the huge contrast from last year when you saw some endowments have returns of 50%. WashU in St. Louis had a return of 65%. So it's a big change. And, the smaller endowments are definitely more heavily relying on U.S. equities. And of course, bonds didn't do so well in the fiscal year too. And usually the bigger endowments have a lot of help from private equity and other alternatives, and they just didn't get that kind of insulation this year.
Janet, full disclosure, I just wrote my first college tuition check for my oldest. So, if I look a little shell-shocked, that's the reason. But, reading the story from that perspective of a parent of a kid going into school, I can't help but worry, does a poor endowment year mean that tuition's going to go up even more next year, especially with this inflation? I mean, colleges are dealing with inflation as much as anyone else. But how do you think about tuition in sort of both of those variables, a high inflation and poor year for endowments?
So good question. The good news is that spending is not determined by 1 year of endowment returns. It's typically an average of 3 to 5 years. So last year's amazing returns definitely helps even out the spending. Now, inflation is another story because when colleges set their meal plans of, say, a 3% increase in February, they're actually having to spend a lot more. So you may see it next year in your overall cost for dining, or if your kid is still in the dorms, that may increase. Yeah, the inflation is a problem on campus, both in terms of the supply chain. You may not get all the types of food you want in the cafeteria, plus a labor shortage.
So teach my kid to cook, I think, is the bottom line.
I am. My daughter's reducing the meal plan as we speak. I love you include this in your story. Colleges typically need annual gains of at least 7% to keep pace with annual spending, and that plays to kind of some of the stuff I feel like you're talking. So as you said, though, they wait 3 years or something before they start to change some things?
It's an average of spending, depending on how they've done over 3 years, or some schools you do the rolling 5-year average. So 1 year is not going to have a huge impact on spending. Just like last year when schools had very robust returns, they didn't spend it all.
Can I just ask, do we ever see an endowment, especially after a year that was so phenomenal last year, where they do park a lot of things in quote unquote a cash-like investment and say, right, because you could coast or especially, do they ever do that to kind of just play it a little bit safer?
Well, I guess it just really depends on the schools. And last year, you had an over allocation to private equity because the returns were so strong. We had a story about this a few months ago, that schools, their allocation to private equity was in the 40% range.
Wow.
Because they just were, they just did so well. Michigan State was describing one fund had 1,000% return.
Wow. Well, I wanted to ask you about that, the sort of the strategies of endowments. I mean, obviously, you hear about sort of the stars, the David Swensons of the world, but you cover this space so closely. I'm curious, the market nerd in me wants to know, do any of these endowments just do passive sort of 60-40 type of thing, or is everyone trying to be David Swenson?
Are you talking like a balanced fund?
Yes, well, a lot of schools did try to be like David Swenson. And, I think given the success of private equity and hedge funds, maybe not more recently, schools wanted to try to find other ways to make money. They saw Yale's endowment exploding. We did a big story several years ago on a school in Wisconsin that had been in index funds for 15 years, and their 10-year return beat the pants off of Harvard. So some schools, they just don't have as much money. If you're a tiny endowment with $50 million, $200 million, you can't get into those funds anyway. Right. So you're safer being in index funds, and you're ultimately paying less fees.
Yeah, of course, this year you're getting clobbered like everyone else, I guess.
Right.
Both on the stock and bond end of it.
Right. It's just like, it's just been the environment. So as a result of a year like this, do we ultimately then see endowments kind of retrenching and being even more cautious in terms of their plays? Or are they looking for some new alternative opportunities? I just wonder, what do they do in terms of adjusting?
They say they're long-term investors, so they're not really changing any strategies. They're still in private equity and hedge funds, and they may not be as much in commodities if they're shedding fossil fuel type investments, which we're the best performer this year.
Is there a lot of that going on, the sort of ESG type
they're
of focus?
shedding, if you're a $200 million endowment and you're in funds where you can sell things, it's very easy to say you have divested. But if you are a big endowment and you have lots of investments in private equity that, as you know, take 10, 12 years to unwind, you're not doing anything. You may be not putting new money in, but things may be unwinding. That's what Harvard announced last year.
All right. Well, listen, as we said, it's among our most read stories on the Bloomberg in terms of what's going on with college endowments and their performance. Janet Lauren, so great to have you in studio. Bloomberg, of course, News higher education finance reporter Janet Lauren. Check her out at Janet Lauren on Twitter. You are listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, Mike Regan, how's that flex work schedule working out for you?
Pretty good. Pretty good. Yeah, I can't complain. A couple days at home
Are you
every
doing
week.
a couple days at
I've, I'll do one or two. This week, obviously not. I'm in for the radio every day.
He's stuck here with us.
So that shows you how much I enjoy coming in for this show. As I'm dragging my butt into work.
We love
all
that.
5 days this week.
Well, we're going to check in with the head of the workplace solutions company, IWG. We're going to talk about flexible working spaces. We'll get to that in just a moment. First up, though, let's get back to the trade. Charlie, 29 minutes.
Indeed, and we've got red on the screen. The Dow, the S&P, NASDAQ, all declining right now. All about tech stocks today, specifically chip stocks, specifically Micron Technology, MU, down now by 4%. Yesterday, we heard from NVIDIA. NVIDIA down again today. Another chip stock tumbling, down now by 3.6%. Among some of the other big chip names, Intel down now by 2.3%. AMD, Advanced Micro Devices, down now by 4.4%. Bottom line, tech gloom. NASDAQ down 135, down 1.1%. NASDAQ 100 index down by 1%. S&P lower by 14, down by 0.4%. Dow Industrials down by 42, a drop there of 0.1%. 10-year yield 2.78%. Spot gold up 0.4%, $17.95 the ounce. And West Texas Intermediate crude also pushing higher, up now by about 0.1%, $90.82 a barrel. Looks like, or actually crude oil moving ahead, closing above $90 a barrel. Wall Street, meanwhile, looking ahead to tomorrow morning's consumer price report. Focus is turning to the question of whether the CPI may have peaked in June after a blowout jobs reading eased worries about a recession. So what will those Fed watchers be looking for tomorrow morning? Laura Rame is chief economist at FS Investments.
I think more troublingly and of more focus to the Fed is going to be that core piece, excluding food and energy. We're just seeing that continue to tick higher, and the consensus is for a 0.5% increase. That brings year on year up to 6.1%. It is still a really, it's still a high level of inflation, multi-decade high, that is really punitive to households.
Sources tell Bloomberg Walt Disney's ESPN has bowed out of bidding for the rights to televise Big Ten sports, ending a long-time relationship between the conference and the network. Walt Disney shares lower now by 1%. Disney, by the way, reports earnings tomorrow. Again, recapping, stocks lower with the S&P down 15, drop there of 0.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, Bloomberg City Lab has reported on the 15-minute city, basically giving every resident of a city the ability to meet their essential needs within a short walk or a bike ride. It's been talked about for Paris, a Utah suburb. And our next guest certainly gets that and plays into that. We welcome Mark Dixon, founder, executive director, and CEO of the workplace solutions company, IWG, International Workplace Group. Companies worked with Microsoft, Disney, BlackRock, Uber, so many household names, and we welcome him. He joins us on the phone from London. Mark, good to have you here with Mike Regan and myself. How are you?
Yeah, I'm good. Yeah, a long day, but a good one.
I feel like every day is a long one. You guys, though, did report a financial update on your business for the first half and noted that as a company, you're looking forward with cautious optimism for the rest of 2022. Give us a little bit more color on your business specifically and what you mean by cautious optimism.
Well, look, there's a very, very strong change in the way companies are working. I think it's actually somewhat helped by the economic uncertainty that pervades in the world today. CFOs around the world are looking at ways they can control or cut costs. Hybrid working, that means allowing people to work in a more flexible way close to where they live, is very popular. It saves about half the fixed cost, and well, it's what people want, so it's quite an easy thing to introduce, and it'll also cut your carbon footprint by around about 70%. So, there are a lot of sort of driving forces that are getting American and global companies to change the way they work. Things worked well in the pandemic, but now there are new drivers, and that's really cost cutting. So with that, demand is very strong for us, in spite of a more difficult economy. And although we have to fight inflation like everyone else around the world, we've got very strong revenue growth, 23%, and that's converting into strong margin improvement and equally strong cash flow, which we're very pleased about. In this time when cash is absolutely king.
Yeah, Mark, I'm wondering what hybrid working looks like in practice. I'm curious, sort of, what are the most common examples you're seeing? Is it, Carol comes into the office Monday and Tuesday, I come in Wednesday and Thursday, and everyone's out on Friday? Or what are sort of the most common scenarios you're seeing for companies doing this?
Look, it's something that's very much misunderstood. It's not about sort of coming into the office. It's about convenient working. So the elephant in the room here is commuting. It's not working from home. It's not working from a central office. It's avoiding commuting. So for workers around the world, commuting is very time consuming. It's become a lot more expensive with the oil price increases. And, it's inconvenient and it's unnecessary for many people. So what people are looking for is not necessarily working from home. That's okay occasionally, but it's not okay all the time because it can damage productivity. So it's about finding a place to work that's just down the road. It's finding a place to work that's convenient, and that's what individuals want. And for companies, as I said earlier, it's a lot cheaper. So hybrid work is about your workers out there working in more convenient, more localized locations. You have less fixed corporate office space, which saves you lots of money. And you bring people together once a fortnight, once a week, once a month. You bring them together to collaborate in a meaningful, well-organized, curated way.
Mark, just got about 25 seconds. We apologize. So are you seeing more companies opting to do that, saying we don't want to have a lease, we're just going to get the space when we need it? And again, just about 20 seconds.
Absolutely, yeah. Yeah, it's sort of, think about it like Spotify is to music, we are to the real estate industry. Make it as a streaming product, use it anywhere, any place you want. That's what companies want, and that's what individuals want, and it's growing fast.
Yeah, we always talk about the Uberization of the world, or things on demand when we need it, and I feel like we are seeing that to some extent, as you said, Mark, in real estate when it comes to company. Mark Dixon, founder, CEO of IWG Global, joining us on the phone from London. Come back soon. Now let's get another update on world and national news. Back to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. A man is under arrest in Albuquerque, New Mexico, and he's being called the primary suspect in the murders of 4 Muslim men. That's according to a tweet by the city's chief of police. Harold Medina says a vehicle was tracked down in connection with one of the murders, and the driver was taken into custody today. The search of former President Donald Trump's Florida home is being labeled as politically motivated by Republicans. Former Vice President Mike Pence says it undermines public confidence in the nation's justice system. Bloomberg Washington correspondent Joe Matthew reports yesterday's search of the home was not the first.
I'll bring you back to January when the National Archives went to Mar-a-Lago and secured 15 boxes full of documents and other items from the White House that were supposed to be a part of the archives property. It has since been reported that the FBI visited Mar-a-Lago in April. A much smaller group met with Donald Trump's lawyers, and it was on a day that Donald Trump was actually at the residence as opposed to yesterday.
Bloomberg's Joe Matthew says Trump was in New York during yesterday's search. Legal experts say the search warrant was approved by a federal judge who had to look at evidence that there was probable cause of a crime being committed. President Biden says the bipartisan chips bill he signed into law today is a once-in-a-generation investment.
We need to make these chips here in America. to bring down everyday costs and create jobs.
Biden says the CHIPS law is also crucial to maintain national security, since many of modern-day weapons rely on chips. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. And we've been talking about this story. It's on the Bloomberg by our Jerry Smith, who covers media and the media industry. And this is kind of interesting. ESPN has bowed out of bidding for the rights to televise Big Ten sports. This is according to a person familiar with the matter, ending a long-time relationship between the conference and the network. Sports Network, of course, owned by Disney, which reports tomorrow. We'll get the results, I believe, after the close. Declining to pay about $380 million a year for the rights, according to the person in the know.
Yeah. Bad news for my daughter, Carol, because if I can't watch Maryland football on ESPN, I'm going to be down there to see her every weekend to catch the game in person.
She's calling already Apple and Amazon. Hey, could you pick up these rights, these streaming rights? Well, this is part of it. I mean, there's so much competition for these rights, and there's so many different platforms. And the streaming services at our Power Players Summit ahead of the Super Bowl this year, I talked with the individual who's in charge of buying a lot of sports rights for Amazon, and they're actively out there buying and bidding on these rights.
Yeah, and don't forget the Big Ten does have its own network, which a lot of these games are on. So some competition there over the years for ESPN. Maybe they're not so happy about that. A little bit of a power play going on, perhaps.
Yeah, exactly. So we're talking about Big Ten football games, schools like University of Michigan, Ohio State University.
Rutgers, don't forget Rutgers.
Go
Everyone
New
always
Jersey.
forgets Rutgers in the Big Ten.
Poor New Jersey, man. They just get. We can say this. Mike and I are both born and bred in New Jersey, right? Were you born in New Jersey?
Well, not born, but I've been here long enough. I've kind of Pennsylvania guy, but I've kind of come around.
It's not the same, Mike. Okay, we'll still accept you. But anyway, they do draw large TV audiences, and so it's interesting with ESPN no longer bidding. Jerry writes, media analysts are watching how other networks, particularly Paramount, Global CBS, and NBC, owned by Comcast, might divide up the Big Ten rights with Fox, who's already, I guess, in there.
Yeah, and look, these are the games everyone wants to watch. That is the power conference in football, so it'll be interesting to see how it goes.
It's still destination viewing, right? Like
Absolutely.
You tune in at a certain time.
Yeah.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell, and tech gloom hitting stocks in the countdown to tomorrow morning's CPI data. S&P is down 22, drop now of 0.5%. Micron Technology's warning is adding to evidence of collapsing chip demand. Micron tumbling by 3.9%. The NASDAQ 100 index moving lower by 1.2%. That index full of tech names. The NASDAQ Composite Index down 158. Down now ahead of the close by 1.3%. The Dow down 90, a drop there of 0.3%. 10-year yield 2.78%. Spot gold up $6 the ounce to $17.94, higher by 0.3%. While West Texas Intermediate crude is down 0.1%, holding above $90 a barrel, 90.65 right now on WTI. So again, recapping, stocks lower, S&P down 20, a drop right now of 0.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. It is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. The Bank of England startled analysts last week with its unexpectedly bleak assessment of the UK's medium-term prospects. Its main projection shows a shallow but protracted recession with essentially no growth in output over the next 3 years and inflation peaking at more than 13% before the end of 2022. Officials rightly emphasize the uncertainty attached to such projections. Yet when all is said and done, one thing stands out. With Britain politically paralyzed and still awaiting the appointment of its next prime minister, this could hardly have come at a worse time. In recent weeks, the Tories' contenders to lead the country have been mostly debating their rival brands of conservatism. But the UK's looming economic challenges demand practical solutions. Whichever candidate prevails in September will need to start delivering them. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, yes, indeed. We are counting down on the market close, just about 10.5 minutes left. As we do so, a headline just crossing the Bloomberg, the U.S. Justice Department preparing to sue Google as soon as next month, according to people familiar with the matter, capping years of work to build a case that the Alphabet unit illegally dominates the digital advertising market. So just taking a quick check on Google shares, and they are right now just down about 0.5%. So they continue to trade off their lows of the session. All right, let's get to the markets. We've been bouncing around. We've got a big inflation print tomorrow. So great to have back with us Anne Maletti, head of active equity at Allspring Global Investments. She joins us here in our Bloomberg Interactive Brokers studio. I'll get it out. There's just too much going on. You and I were just saying, remember when it used to be quiet in the summer? It's not. How does that, the constant news flow, whether it's economic news, whether it's earnings news, whether it's Fed speak, or just questions about recession, no recession, how does that complicate kind of adjusting portfolios or figuring out where we go from here?
It's such a great question, Carol, and I think it's really about trying to tune things out sometimes, which is interesting because most people would go like, you have to know everything that's going on. The challenge is really tuning out the noise and carefully paying attention to the things that really only matter to the stocks that you're invested in, or to your portfolios and your strategy. That's really what our investment teams are trying to do right now.
That's it. Carol's used to tuning me out, so she's
I'm from a
no
large
stranger
family. I
to
know how
that
to tune out a
strategy.
lot.
You got to tune out.
Not just you, Mike.
But Ed, one thing you have to sort of tune into is the earnings season, and I think it's been kind of a wild one. I mean, no surprise it's been a wild few years, but it seems like some days you'll see a retailer come out and they're having all sorts of trouble and their stock tanks, and then the next day some other consumer company is like, no, everything's great. I mean, is it execution issues? Is it sort of idiosyncratic issues? Some companies are handling inflation and supply chain better, or is there something else at play, do you think?
It's so interesting, Mike, because there's like a bifurcation that's really happening. And as we're looking at earnings, and I was talking to our portfolio managers last week, and they were describing this too. Like, you almost have to bucket the companies that are talking about struggling with the consumer, and then the ones that are saying we're not seeing it yet.
Yeah.
And it's challenging because in the past you would either see it, they'd all see it, or none of them are seeing it.
Is it a high-end versus low-end consumer?
I think that's what it is.
Story?
I think that's what it is. And the fortunate thing about me living in the Midwest is I'm talking to a lot of my friends' family who don't have a lot of disposable income. And one example, a friend of mine who uses a credit card only for groceries and gas said, and like my credit card bill, I looked at last year's, use it for the same thing, only those two things, double over the last year. And so, if you don't have a lot of disposable income, you're being impacted. And in the companies that were impacted, Walmart, Target, the companies that are touching those, the companies that are saying we're not seeing it yet, Visa, MasterCard, they're not, they're touching more of the higher end consumer, the consumer that has more disposable income. We're seeing buckets of that. And then certainly companies that have higher input costs feeling more pressures as well. But real true bifurcation and not a lot of correlation between every company.
So, Ann, we obsess about things like the inflation print tomorrow or a Fed meeting. Like something like tomorrow's inflation print, how important is it to you and how you think about managing money right now?
Yeah, what's interesting about inflation is just kind of where we're at today and then the direction of where it's going. Tomorrow's print in of itself, not probably that meaningful. We want to know, gosh, have we seen the peak? Is the peak behind us? But again, that's only just a short-term metric, right? If we've seen the peak, are we going to test it again in the future? I mean, all of those questions still exist.
Because that's the thing, I do feel like there used to be times past where I think we could kind of figure out where we're going. And I don't know whether it's post-pandemic. I don't know whether it's just so much money that was pumped in and then now it's being sucked out. Like, I'm trying to understand that maybe this time is different. Forgive me for saying that, but
I think it is different this time. And I think the frustrating thing about being an investor in this market rather than a trader is that you're focused on the long term. And traders right now are focused on short-term trading and focused on what's happening tomorrow and positioning for that. So if you look at the inverse correlation to like the biotech index or growth versus value, it's just trading on whatever the bond market's doing, right? And long-term investors are saying, no, I'm going to focus on quality here and companies and management teams that can manage through a clearly different, regime change, paradigm shift, whatever you want to call it for the future. We definitely have higher inflation. We definitely are going to see higher rates probably over the next decade than we've seen over the past decade. And stock selection is going to matter. The unfortunate thing is right now, the traders are winning and just swinging the markets based on but based on yield.
So when you talk about quality, and we hear this a lot, like it's kind of the time to be defensive and look for quality companies. How do you define quality? Is it dividend yields? Is it just strong balance sheet? All of the above?
I think free cash flow is going to matter more than anything because the cost of capital is, extremely high for some companies. And it's going to matter a lot more. I mean, when you had free capital, essentially, for so many years, it caused a lot of, companies to get out of control, a lack of discipline, I would say. And you're going to have more discipline going forward. So I would say free cash flow, strong balance sheets, and then management teams who have experienced different cycles before, that's going to matter a lot more.
No memes. Is it quality memes count?
I didn't hear Bed Bath & Beyond. AMC, I didn't hear that. Just got about 30 seconds. So where don't you want to be right now?
I think where you probably don't want to be is, again, I would focus on, the lack of quality. I would stay away from this rally we've seen in, the high yield space, in the companies with kind of poor balance sheets, companies like if you just do a quick screen of companies that are going to need to raise capital in the next year, forget it.
Because it's going to be too expensive and it's going to be problematic. Always wish we had more time. Thank you so much for taking the time to be with us.
You.
Always good to talk
Great
with
to
you.
be back.
Anne Maletti, she is head of active equity at Allspring Global Investments, joining us here in our interactive broker studio. All right, folks, we've just got about 3 minutes left in today's trading session, bouncing around and continuing to see the NASDAQ really the underperformer. Time to head over to our TV colleagues for Beyond the Bell on radio, TV, and YouTube.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we are about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Katie Greifeld, counting you down to the closing bell. Here to take us beyond the bell with a global simulcast. Carol Massa, Mike Regan, in for Tim Stenovic. We bring together TV, radio, and YouTube audiences to dissect what has been a risk-off, profit-taking, kind of worried day ahead of that all-important data dump.
Yeah, you do wonder, is the CPI print, how much it might change the tone in the trade. We just had on Anne Maletti. She's head of active equity over at Allspring Global Investments. And I asked her, is it different this time around, though, coming out of a pandemic after so much stimulus? And she said, maybe we need to think about that we will see definitely higher interest rates and higher inflation over the next decade. So maybe, Mike, it is different this time around.
Yeah, speaking of higher interest rates, those bond yields are perking up again, 2.79% or so on the 10-year yield. So that, I think, is going to be where the rubber meets the road tomorrow with the inflation print. How does the bond market react? We've seen such a wild, volatile bond market this year, Taylor, that I think it's hard for people to know where to put their money when the risk-free rate is jumping all over the place.
And to that point, we were just speaking with David Balin, saying that when we started to get up to about 3.25, you saw a lot of people come in and start to nibble and buy. And indeed, you get all the way back down to not only below 3, but below 280 and at 279. So indeed, Katie, it has been a wild ride as we try to figure out where full faith and credit stands.
Absolutely. And as people are sort of nibbling at the long end of the curve, they're also nibbling at tech. Really interesting comments that some of his clients, they're starting to look at that sector again.
And they have been, and maybe that's why we see on the day some profit taking, because we have had a hard rally since the bottom in June. We have managed to put money back to work. People call this a bear market rally. For today, we do start to see that enthusiasm just curtailed, some nervousness creep in. And as the bells ring and the confetti falls over in the NASDAQ, we are seeing a 150-point loss on that benchmark. This is 1.2% lower. 12,493 is where we end the day's trade. Notable, though, your average volumes were up almost 17% on the NASDAQ. It was thinner volumes, a pullback in volumes on the S&P 500. We're down by 17 points. The Dow Jones Industrial Average also thinner on the day in terms of volumes, and we're 56 points lower. Pull it out, though, and you'll see that having a rough ride along with big tech was the small caps. In fact, you're underperforming big benchmark off by 1.5% on the day, Carol.
Yeah, and you mentioned profit-taking, Caroline, and semiconductor names, which were up 17% in the month of July, definitely seeing some profit-taking and some concerns about demand going forward. The Philadelphia stocks down about 4.6%, guys, in today's trade.
You rarely see that, Carol, when you take a look at some of the sectors. I'm going to switch it up today and start with the losers, because that's actually really where you went. The semiconductor equipment index, the worst performer on the day. You're off about 3.85% on some of the individual sectors that are really sort of all focused in that big tech category. Katie, we go to the top, and it's banks and energy sort of firmly in the lead here. Energy, another sector, up 1.6% on the day, Carol.
All right, so let's get to some of the gainers. It wasn't so easy to find, but Nielsen Holdings, you guys talked about it earlier, up 21% today, top in the S&P 500, soaring after the company said its largest shareholder was in talks to join a consortium poised to take over the company. So we're watching that one and investors moving into that. That stock, by the way, up about 34% so far here in 2022. Principal Financial Group also announced outperformer. That stock holding on to most of its gains of the day, up about 7%, top in the S&P 500. Morgan Stanley coming out, adjusting its price target to $68 a share from $65, keeping its equal weight rating. Remember, the company reported after the close yesterday, second quarter adjusted EPS was a beat. And one more for you, Vertex Pharmaceuticals, that stock up about 1.7% in today's trade, top in the NASDAQ 100. It's just been on a tear, so momentum in this name continues. It's up about 36% so far in this year, and it reported upbeat results and guidance last week. So again, investors might continuing to move into it.
Yeah, Carol, well, one stock investors are not moving into today, Norwegian Cruise Lines, down about 11%. This is after they forecast an unexpected loss for the third quarter, saying that the economy, the pandemic, all the things basically have continued to suppress demand for cruise lines. Analysts were actually looking for earnings of 33 cents a share for their fiscal third quarter. So this forecast for a loss, they didn't specify how big it will be, but certainly taking the street by surprise. Also on the downside, Moderna, the COVID vaccine maker, down about 6.5%. A couple things going on there. They've learned that doses originally scheduled for delivery in Europe in the summer will now be expected to be delivered later in the year. And also their competitor Novavax just really getting crushed today, down about 30%. Another vaccine maker that said sales for the year will be about $2.3 billion. That's less than half the previous expected peak of $5 billion. And finally, on the downside, Ralph Lauren down about 4.5%. Earnings and revenue for the latest quarter actually beat estimate, but those second quarter sales forecasts trailed the consensus estimate. Ralph Lauren also warning that this strong dollar FX effect will hurt their profit margins. So bad day for Ralph Lauren.
And I thought luxury was kind of insulated. Let's talk about that dollar effect though, Mike, because actually on the day the dollar was pretty muted. It had been trading a little bit lighter, but overall we see most of the currencies up against most of the G10 currencies. Swiss franc strengthening to the tune of about 0.1%, Norwegian krone strengthening by about 0.3%, dollar pulling back after it's off about 2% from its highs previous month. But really we focus in on what the CPI print is going to mean for the US dollar and whether or not those hikes are going to be coming fast. I look at what's happening in terms of the inflationary pressure. Natural gas up about 3% here in the United States. We actually saw oil sort of moving around on the day, but it was actually generally pulling lower on the back of maybe more dire sentiment and worries about the recession risks. I'm looking at a sovereign bond picture that is also very mixed. We're seeing maybe some yields pushing higher in Europe and Greece and Netherlands and Italy, a sell-off there, but actually a little bit of buying that happened in Asia trading, Taylor.
Not buying happening in full faith and credit, Caroline, as we come here back to the U.S. It actually was yields higher all the way across the curve with bond price lower. You see that really big focus on the front end of the yield curve. Carol, a decent three-year auction today. Again, big focus on the front end because that's what the Fed controls as we think about the big CPI and then PPI to follow after. So again, I leave you with this, up about 5 to 6 basis points between the 2 and the 5-year maturities.
Yeah, Taylor, a lot coming at investors certainly on this Tuesday, including a little bit of earnings flow and Wynn Resorts coming out. Initially, that stock was down about 4.5% in the after hours. Now we're calling it little changes, down fractionally. In terms of the second quarter adjusted loss, we're talking about 82 cents a share. That compares with an estimated loss of $1.02 and its operating revenue. This looks like it was a beat, $561.1 million. The estimate was for 504. So it looks like Caroline investors kind of working their way through the numbers and maybe not so disappointed versus the initial stock reaction.
Let's have a look at Roblox, of course, a key stay-at-home trade, one where everyone was out there playing games, sitting at home in the COVID period, now sinking some 8% after hours as second quarter bookings came in lighter than expected, let's call it $640 million. The market wanted to see 657. Daily active users, 52.2 million. That is less than the market wanted to see of 54 million. They're trying to push us forward, give us the July numbers. Daily active users were actually up 26% year on year at 58.5 million. And their bookings were coming in at a growth rate of about 8 to 10% year on year. And revenue for July climbing as well, 25 to 27% year on year. But really, this is a company that everyone had thought maybe the time had changed. We'd fast forwarded. Everyone was going to be back and really getting involved in this sort of what was perhaps our edging into the metaverse in some ways, but really the second quarter adjusted EBITDA also coming in way light, and we're falling after hours, Katie.
I was wondering when you were going to say metaverse. Yeah, it feels like Roblox was the OG there, taking a bite out of shares. We are hearing a somewhat upbeat tone from the company, or an optimistic one. The chief financial officer saying that we're going to remain focused on investing in strategic areas, drive platform growth and monetization. So still planning to sort of invest in that digital future.
And huge bones to pick with the one-page press release and 2 quotes, Caroline, when we think about sort of the upbeat nature. And we had similar comments yesterday with some of the companies that miss, and it strikes a different tone. Carol, in the press release, the CEO, of course, also adding looking at users and engagement, also looking at the appeal of Roblox across geographies and age groups. So something to focus on too.
I think you hit it, Taylor, because they're saying about broadening the appeal of Roblox. So they're basically looking to hopefully bring in more users, bring in different age groups, bring in different geographies. So they're just kind of looking to expand their base here.
I thought you were going to agree with me on the bones to pick with all these press releases.
I like that too. I liked it. You went right for it.
Yeah, I don't know about the rest of you guys, but I'm biting my nails waiting for these Coinbase results to come in today. I think this is going to be an interesting quarter to see how the crypto exchange fared, given all the volatility in the crypto world. Analysts also looking to hear more about that pact with BlackRock for institutional trading. What a wild ride for this stock, though, down 11% today after really just being on fire the last few days. So keep your eyes peeled on the terminal for those Coinbase results. I can't wait.
All right, Roblox, though, down 9.5% in the after hours, and Wynn now bouncing around just down about 0.8%. We'll continue to follow them, as well as Coinbase, into the Wednesday trade and that CPI print. All right, that's a wrap for our cross-platform coverage. Radio, TV, YouTube, we do it all. We call it Beyond the Bell. We will see you again, same time, same place, tomorrow.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week. Hi, everybody. Carol Massar, Tim Stenovic is off. Mike Regan, Bloomberg Senior Markets Editor. He's with me here in our interactive broker studio. Roblox down about 10% in the aftermarket. So, again, I do think it's that pivot, right, as we kind of get back into our normal world post-pandemic?
Yeah, absolutely. Just market not being kind to those stay-at-home stocks that did so well over the pandemic. So fascinating to watch.
Yeah, right, exactly. And then Wynn Resorts, it's down about 2% in the after hours, too. I did see the press release. Them saying in Macau, while COVID-related travel restrictions continue to impact our results, we remain confident the market will benefit from the return of visitation over time. So we'll keep an eye on that. All right, back to world and national news. Here is Nancy Lyons.
Thanks, Carol. President Biden has signed ratification documents giving U.S. approval of Finland and Sweden joining the NATO alliance.
It was and is a watershed moment, I believe, in the alliance and for the greater security and stability not only of Europe and the United States, but of the world.
Biden earlier today also signed into law the CHIPS Act that incentivizes U.S. companies to manufacture semiconductor chips here in the U.S. The FBI is coming under attack today from Republicans who are framing the search of Donald Trump's Mar-a-Lago home as politically motivated. A search warrant was approved by a federal judge, and University of Michigan law professor Barbara McQuaid says that is significant.
There is something here that has satisfied a judge that a crime has been committed. It may be simply the mishandling of classified documents, but that alone is a very serious crime. There's been reporting that the documents involved here are top secret documents. That means the definition of top secret is documents, the disclosure of which would cause exceptionally grave harm to the national security of the United States.
McQuaid tells Bloomberg a search warrant is usually only issued if other avenues for obtaining the documents have been exhausted. Trump says the raid was not necessary or appropriate. Rudy Giuliani's testimony before a special grand jury in Atlanta is now tentatively rescheduled for next week. The attorney to former President Trump was set to testify today in Georgia's 2020 election probe, but his lawyers filed an emergency motion to delay, citing Giuliani's recent heart procedure. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much, Nancy Lyons in our 99.1 newsroom in Washington, D.C. Hey, just a reminder, since we've got some stocks on the move in the after hours, Roblox continuing to trade down about 14% here. The company just reported its latest second quarter results, and the big headline that seems to be catching everybody's attention is the second quarter bookings coming in light, 639.9 million versus 657.2 was the estimate. So concern that, this is something that certainly benefited during the pandemic and everybody was staying at home playing games and so on. Maybe not so much as we come back out into the world.
Well, yeah, and especially a company like this that caters to teens and young kids who were cooped up. I mean, what a time to be cooped up as a young teen, a preteen. You can see how a company like that was booming during that time. I don't know. I'm still kind of bullish on the notion of kids going to play too many video games.
They're going to go back to
They'll go back to it. They'll get sick of running around outside in the summer.
They say they had an average of 52.2 million users, daily users, up 21% from a year ago, but less than the 28% increase in the first quarter, so some adjustment.
Yeah.
They're still playing, Mike.
Yeah, they're still out there.
All right, and Wynn also out with their results, and that stock's down 1.6% in the after hours, so we'll continue to follow that. We're also following, and we're going to talk about the auto market in just a moment, because there's a story out on the Bloomberg about peak car, Mike, just 14 years away.
Peak car. So what's that mean? That means that's when we'll sell the most cars and fewer cars after that?
Basically, this is from our Bloomberg NEF group, and they're saying that global passenger vehicle fleet growing from 1.2 billion to a record of just over 1.5 billion in 2039, but that will be the peak. They actually expect it to peak in 2036.
I think we should have flying cars by then. I think maybe that's part of what's going on here is that we'll be all in the Jetsons car by that time, and they won't count for the sales.
Part of it, they say, is we're all getting older. And that there maybe won't be as much cars on the road. But I like the idea of kind of flying around, right? Somebody flying me around. Anyway, we're going to talk to the CEO of CarParts.com. We'll get an industry view on all of this. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Earnings after the bell include Coinbase second quarter revenue coming in at $808.3 million. The estimates for Coinbase, though, $854.8 million. Roblox also reporting earnings. We're getting those numbers now as we sort through them. One headline to pass along: second quarter bookings, $739.9 million. Estimates for Roblox, $657.2 million. That stock is selling off. RBLX on the ticker. It is down now after hours by just about 12%. A move lower for stocks today, with the Dow, the S&P, and NASDAQ all declining ahead of the CPI report tomorrow morning. S&P down 17, a drop today of 0.4%. Dow Industrials down 58, a decline of 0.2%. And we had the NASDAQ Composite Index down 150, a drop there of 1.2%. NASDAQ 100 Index today lower by 1.15%. Bottom line here, downbeat outlook from another giant chip maker, case in point, Micron Technology, MU on the ticker. Micron down 3.7% today. Also, we have many traders unwilling to make any risky bets ahead of tomorrow morning's pivotal inflation reading. We've got you covered on the CPI report, 8:30 a.m. Wall Street time. Instant analysis and reaction when that number hits tomorrow morning. 10-year yield 2.77%. Spot gold up 0.3%, $17.94 the ounce. And West Texas Intermediate crude down 0.2%, $90.54 a barrel on WTI. A down day for the Dow, the S&P, and NASDAQ. S&P down 17, a drop today of 0.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you. And of course, Charlie mentioned Coinbase still down about 3.9% in the aftermarket following its earnings release. All right, we just talked about Picard. We're going to shift gears. Picard just 14 years away after over a century of growth. That's coming from our Bloomberg NEF team. So we wanted to talk a little bit about the car industry. And with more on the auto world, we've got David Mignon. He is the CEO of the publicly held smallcapcarparts.com. Stock off about 23% year to date, but up more than 40% from its late April low. And he joins us via Zoom from Torrance, California. David, so nice to have you here with Mike and myself. How are you? And tell us a little bit about your vantage point and what you're seeing when it comes to the auto industry.
Thanks for having me, guys. Let me tell you a little bit about what we do. Carparts.com, we're a direct-to-consumer, pure-play online player of auto parts and accessories. We've been in business for 25 years. And what makes us very unique is that we have a vertically integrated supply chain. So we buy our own parts from globally, a combination of collision parts and replacement parts, and then we sell them direct to consumer via our own distribution channel. So we're in a very good spot to see what's going on in the auto world and the auto parts industry. The auto industry is just gigantic. You guys know that. You cover it all the time. Auto parts is $300 billion market, and believe it or not, the average age of a car on the road is 12.2 years. So the average American drives an older car. And in order to keep that car going and running longer, they rely on retailers like us to buy, quality parts at competitive prices.
David, during the last couple of years, we heard so much about how the actual automakers were struggling to source the chips they need and other parts. I'm curious how you guys fared with all the supply chain disruptions we've had. I can only imagine it must have been a giant headache. Was it tough to source the parts you needed in the last few years?
I mean, supply chain was basically top of mind for the last 2 years, right? Before inflation and Ukraine and everything else. We were very aggressive early on in the pandemic in ramping up inventory buys. We've built capabilities in-house. So we increased the quantities of our buy. We increased our safety stock requirements. We opened more distribution centers just to carry more inventory. What we found was it took longer and it was more complicated to get the parts. So in order to keep going and to keep growing, we just had to carry more inventory. And so if you look at it from a financial investor perspective, we basically had to sacrifice inventory turns just to make sure that we had the parts in stock.
And of course, the other big shock this year is inflation. And I'm wondering how that plays into your business. I mean, does it sort of cause this effect where consumers are maybe more willing to try to work on their own car and find those parts on your site? Or is you know, how's the price problems we've seen this year sort of translating into your everyday business?
Yeah, absolutely. And historically, auto parts and auto repair in general is pretty inflation resistant. You know, if you need a car, if you're a school teacher or a nurse and you need your car to get to work, you're going to have to do what you need to do to keep it going. So obviously for every retailer and for all the consumers out there, inflation is hitting everyone. And we're not immune. You know, what we had to do was really kind of make sure that we found efficiencies in the supply chain to be able to pass on our savings of that, you know, direct to consumer, factory to consumer, to the consumer. Having said that, you know, you're absolutely right. In terms of inflation, what it does is that if historically you were do it for me and needed a friend or a mechanic to do the repair, chances are you're going to go on YouTube or on Google and figure out a way to source the parts and do it cheaper.
All my friends are on YouTube these days trying to figure out how to fix their car. It's amazing. I had to go on YouTube to find out how to change the tire in my Jeep Cherokee. I'm not too embarrassed to admit. YouTube is creating a lot of mechanics, I have a feeling, David.
I'm sure you saved a lot of money, but you're absolutely right. YouTube is creating a lot of mechanics. And ultimately, if you want to do the labor yourself and you could find that 10 or 15-minute video, you know, companies like us, we're a good alternative because, you know, you can get the parts for 50% cheaper than in the store.
David, I want to ask you two quick things because we only have about a minute and a half left here. You said you built up inventory. Does that mean you're going to be working down inventory, maybe not demanding or buying so much from your suppliers over the next few months?
That is a great question, and the answer is yes. We're seeing some signs of easing up in the supply chain. So as the lead times start compressing, we have to carry less safety stock or buffer inventory. And what you're going to see from us, and I'm assuming other companies out there, is converting that inventory back to cash and seeing some working capital improvements.
Okay, speaking of working capital, and I'm just reading off of your press release because you guys reported yesterday. Just quickly, you guys have you entered into an amended and restated $75 million credit facility, the ability to increase to $150 million. Are you looking to get hold of whatever cash you get because it's, you know, you're concerned about maybe what the environment might be in, I don't know, a few months? It might be a tougher environment and just got about 20, 25, 30 seconds.
Yeah, I think there's definitely a lot of signs that the economic environment is getting tougher. Having said that, you know, we're growing, we're profitable, we have positive unit economics on every transaction, we have no debt, and we're well funded and well capitalized. So, you know, that line of credit is just a safety net that we basically don't need.
Yes or no, recession or no recession in the next 6 months?
It depends what your definition is. I'd say recession/transition.
Recession/transition. There's a new one. David Mignon, come back anytime. Chief Executive Officer, CarParts.com, via Zoom from Torrance, California. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, we're already having a great conversation off air with our next guest, so I can't wait to bring him in. We're going to be talking with Nir Eyal in just a moment, talking about gadgets and apps and habits forming. And I don't know, Mike, are you a big gadget guy?
I am, who isn't these days, I mean, I'm glued to my iPhone like everyone else. That's about it, though. The thing about the iPhone is it's replaced every other gadget in my life. There's no other gadgets to own anymore.
It's not a gadget, it's a necessity. All right, we're going to talk with him in just a moment, though. First up, though, back to your top business stories and some of that news after the close. Hey, Charlie.
Well, hello there, and all of a sudden, lots going on after hours here. Let us begin with Coinbase Global. That stock is off now by 3.4%, reported earnings. In fact, it posted a $1.1 billion loss, along with lower than expected revenue, as the largest American cryptocurrency exchange was battered by tumbling digital asset prices. Coinbase, again, after hours, down now by 3.48%. Also reporting after hours, Roblox, that stock plunging now by 12%. It is a video game platform that's aimed at preteens and teenagers. It reported bookings that missed analyst estimates, becoming the latest gaming company to deliver disappointing results amid a post-pandemic industry-wide slump. We saw a slump on Wall Street today ahead of that CPI report. Micron Technology, a giant chip maker, another giant chip maker following what we heard from NVIDIA yesterday. It is adding to recession fears. We had Micron dropping today by 3.7%. Should point out NVIDIA today was also lower by just about 4%. Bottom line here, the Dow, the S&P, and NASDAQ all declined. S&P down 17, a drop of 0.4%. The Dow is down 58, lower today by 0.2%. NASDAQ down 150, a decline there of 1.2%. 10-year yield 2.77%. Spot gold higher by 0.3%, $17.94 the ounce. West Texas Intermediate crude down 6 cents, $90.70 a barrel. So the Dow, the S&P, and NASDAQ all declined today. As for the market backdrop, Ann Maletti is head of active equity at Allspring Global Investments, and she was our guest right here on Bloomberg Business Week.
We definitely have higher inflation. We definitely are going to see higher rates probably over the next decade than we've seen over the past decade. And stock selection is going to matter. The unfortunate thing is right now, the traders are winning and just swinging the markets based on yield.
And today we had the 10-year again yielding 2.77%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, you are listening to, first of all, Charlie, thank you so much. You're listening to Bloomberg Business Week, watching us on YouTube. I want to get right to our guest. He's really interesting, and you might remember a story by Bloomberg's Missy Igafopoulou that began with, in Silicon Valley, Nir Eyal is the habits guy. Want to understand how to get app users to come back in again? Then Eyal is your man. That's what she wrote in a story. He is a former lecturer at Stanford's Graduate School of Business, an angel investor. He has studied how companies such as Facebook, now of course Meta, and Twitter encourage users to spend time on their platforms. He's also author of a book. It was out in 2014, Hooked: How to Build Habit-Forming Products. His website is nearandfar.com, and he joins us in our Bloomberg Interactive Brokers studio. Welcome.
Thanks. Great to be here.
Great background. I feel like I have a million questions. So you're just going to have to stay for the next 60 minutes. We're just going to cancel the next show. Tell us a little bit about, we were talking about the Oura Ring, which you have on. All of this information and all of this information gadgets or gathering gadgets that we're wearing, is it a good thing for us? And Mike talked about, he's on his phone all the time. Is this good for society?
It's a great question. Is it good? Is it bad? The answer is yes. It's both.
It is. Yeah.
Paul Virilio has a wonderful quote. He said, when we invented the ship, we invented the shipwreck.
That's
so,
interesting.
of course, every new technology, especially one on such a massive scale as the internet, is going to have goods and bads about how we manage those.
Nir, I'm wondering about sort of the chemicals that are at play, like the brain chemicals. You always hear about, well, if you get 10 notifications on your, is that a real thing? Is there dopamine or whatever happiness chemicals at work when you get addicted to an app and you're love to see those notifications and stuff like that?
Yes and no. I hate to give a wishy-washy answer, but typically, if you hear somebody talk about dopamine squirts, just discount everything they say after
Really?
that.
Yeah.
Because it's so overused, it's so overplayed. Everything releases dopamine. When you hug somebody, you get dopamine. When you learn to play the piano or play tennis, you get a squirt of dopamine. Dopamine is not cocaine in the brain. It's on a different scale than using an app. So the whole idea of getting addicted to an app or hijacking your brain is so overplayed. If you actually look at the research and you talk to the people who study this stuff, some people get addicted, of course, just like some people get addicted to alcohol, right? Alcohol is highly addictive, but not everybody who has a glass of wine with dinner is an alcoholic, right? About 3 to 5% of the population is addicted, but it's certainly not everyone. Addiction is a pathology, and just because some people get addicted doesn't mean everyone will.
So these little dopamine hits that we get aren't, it's something pretty natural that we'd probably be getting from if we see a puppy or something. Anyway.
And we want products to get better. Products being engaging is not a problem, it's progress. Right? Are we going to say, hey, Apple, your phones are really easy to use, stop that. Netflix, your shows, I want to watch them all the time. Can you please make boring shows? It's ridiculous. It's a wonderful thing that the world is becoming more engaging, but the cost of this is that we have to learn some new manners, some new norms, some new ways of being in the world so that we can get the best of these products without letting them get the best of us.
Hallelujah, because I can't imagine, how many times you walk onto like a subway train and like just people are just involved, so engaged either in their phone or something, and you feel kind of rude kind of moving around. And I do feel like we need to kind of rethink how we interact and engage in society as a whole. So I think about things like healthcare. And it's funny, I had a TMJ, or I do have a TMJ issue, and I actually have an app that reminds me to relax my jaw. And it sounds so stupid and silly, and I kind of laughed when my doctor said, I want you to download this app. It's a very simple app, but it works.
Yeah.
How do you think about how we could get so much more in the healthcare and wellness space when it comes to apps and, whether it's workable technology? How do you see it? How do you see that it should play out or is playing out?
So we were talking about, before we went on air, about how I get a gadget almost every week. Somebody sends me something to try out because I'm in this health change space.
Yeah.
And healthcare is specifically taking off. I mean, I think one thing I'm super excited about are continuous glucose monitors. Have you seen those around? It used to be something that only diabetics wore, and it's a game changer. I mean, my mother-in-law is a diabetic.
I have a family member who has
and
one.
You start seeing them on people's arms. What you start seeing now is that people who don't have diabetes are now tracking their glucose because it's so easy to do that now you can track it throughout the day. And there's several companies, I work with a few, that will tell you before you eat, right, before you get a snack, check your glucose. Why? Because it'll tell you whether you are psychologically hungry or physically hungry. And sometimes it's hard for us to tap and saying, actually, my blood glucose is fine. I really don't need a snack. Let me wait 15 minutes. That can delay snacking. So that's just one small example, but I think we're going to see an explosion of these new behavior change apps.
Nir, sit tight for a second because we've got to do a break, and then we'll come back and talk some more. Nir Ayal, he is author and investor. NirandFar.com is his website. You can find out a lot more information. He's here in our Interactive Broker studio. I want to dig a little bit deeper into healthcare because it does feel like we're just scratching the surface, and we'll come back to him in just a moment. You're listening and watching Bloomberg Business Week. Carol Master along with Mike Regan. Right now, an update on world and national news. Up to Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. Saying that it is a once-in-a-generation investment, President Biden has signed the bipartisan CHIPS measure into law. He says those chips power just about everything these days, so making the investment now is essential.
We are better positioned than any other nation in the world to win the economic competition of the 21st century.
Biden says in addition to offering incentives for semiconductor manufacturing, the law also earmarks federal dollars for science research and development. Micron is wasting no time in announcing that it's making a $40 billion investment to build semiconductor chips here in the U.S. The company today announced its investment will last through the end of the decade, despite signs that the demand for chips is actually falling off. Tennis great Serena Williams is saying goodbye to the sport that gave her so much. The 40-year-old, 23 Grand Slam singles winner penned an essay for Vogue magazine that came out today where she announced she would be leaving the game. Williams won her first competitive match in more than a year at a recent event in Toronto where she seemed to hint to reporters that retirement might be near.
There's just a light at the end of the tunnel. I don't know. I'm getting closer to the light. Can't wait to get to that light.
I know you're joking, but can you...
I'm not joking.
Okay, so then explain to me what the light is to you, what the light represents.
Freedom.
Williams says she did not want to choose between her career and having more kids, but says something had to give. She says she will be playing in the upcoming U.S. Open that starts August 29th in New York. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in D.C. Still with us is Nariel. He's author, he's investor, angel investor. His blog, nearandfar.com. Check it out. He's here with Mike Regan and myself in our Interactive Broker studio. We're going to talk for a couple of minutes, and then we'll take another break and come back and talk more. But I was in the break saying, all right, so what are some of your favorite, either apps or products that are out there, let's say for working out, because there's so many.
Yeah. So one of the apps I talk about in my book, Hooked, is an app called Fitbod, Fitbod. And I love this app because I actually put out a blog post. I was so frustrated with how bad most fitness apps were. I put out a blog post that the title was, Why Your Fitness App is Making You Fat. Because they were so bad. All of them were so terrible. And then somebody told me about Fitbod. I downloaded it.
Why were they so bad? Was it just...
Because they didn't form a habit.
Oh, okay,
right?
Got it.
And so I downloaded Fitbod, and I started using it, and I said, oh my goodness, this is actually really great. And it looks like it's following the Hook model. Hook model is what I based my book on and my class at Stanford on. And so I just went to the customer support email thing, and I sent them an email. I said, have you by chance read my book? Within 30 seconds, the founder wrote me back and said, yes, we actually built the Hook model into the app, and it's changed my life.
That's pretty cool.
I use Fitbod every time I work out. I'm 44 years old, best shape of my life because of this app. It's fantastic.
Well, Near, cut to the chase here. How can Carol and I make this show more habit forming? That's what we need to know. What do we need?
We have a huge following. We do.
How do we need them habitually listening? What do we do?
Well, you're doing great so far, so that's fantastic. So the Hook model has.
Here's like have me on every day.
He has another segment coming up. So
let's see. Okay, how do we analyze it?
20 seconds.
Okay,
25 seconds.
Oh, that's so the most important part. The fuel that we see is the backbone of every habit-forming product is a variable reward, right? Some kind of intermittent reinforcement. And of course, you have it in that you provide the news, the first three letters of news, N-E-W, new. It's all about variability. So that's what makes sports engaging, what makes slot machines so intoxicating, what makes social media fun. It's all about the new, the variability. So you've got that as your backbone.
It's not personality?
Of course
I'm crushed. Maybe he won't come back. No, I'm just kidding.
I thought it was my good looks. I don't know.
We're going to come back with you in just a moment.
stories, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Tech jitters rattled stocks today ahead of the key CPI report tomorrow morning. The Dow, the S&P, NASDAQ 100 index, and the Russell 2000 index all declined today. S&P was down 17, dropped today of 0.4%. The Dow down 58, dropped there of 0.2%. NASDAQ down 150, lower by 1.2%, while the NASDAQ 100 index down 1.1%. Russell 2000 was down 1.5%. Among today's catalysts, we had that warning out of Micron Technology. MU on the ticker, it was down 3.7%. After the bell, Coinbase Global posted a $1.1 billion loss and lower than expected revenue as the largest U.S. cryptocurrency exchange was battered by tumbling digital asset prices. After hours, Coinbase down by about 3.5%. Also reporting earnings after the close of trading today, Roblox, that stock is plunging by 12.1%. Roblox, the video game platform that's aimed at preteens and teenagers. Again, the 10-year, 2.78%. Spot gold up 0.3%, $17.93 the ounce. And West Texas Intermediate crude was down 0.2%, $90.57 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So I want to get back to our guest. We are still talking with Nir Eyal. He is the habits guy, as our Bloomberg's Missy Gafapoulou had written about, but he was a former lecturer at Stanford's Graduate School of Business. He has studied how companies, as we mentioned, like Meta and Twitter, encourage users to spend time on the platforms. Check out his book, 2014, Hooked, How to Build Habit-Forming Products. And he's also got a blog, website, nirandfar.com, and he's still with us in our studio. So we were talking about wellness and health apps, in particular for some of our audience. Peloton, right? Some were addicted. There's something that really rode a high, no pun intended, and then obviously has come undone a bunch. What do you think about that?
Yeah, it's a super interesting story because I think it's a great example of why variability is so important for habit formation. That if something is not variable, if it's predictable, it's boring, right? Think about games, right? Everybody wants to gamify everything, put points and badges and leaderboards. But most games, people burn out on, right? Think about, remember Farmville?
Yes.
Farmville was like the biggest thing ever back in, 2012?
Right.
Who's playing Farmville anymore? Nobody. Why? Because after Farmville, it was Chefville and whatever, Frontierville. It was like the same game again
you tell me
and again.
nobody's going to be playing Wordle in a few years?
You may be surprised.
Okay. Yeah.
As long as you know what's great about Wordle is that it's social.
Yeah.
Or as opposed to solitary experiences like Peloton. So Peloton, during the pandemic, when you couldn't go to the gym, you couldn't do the things you used to do, it was very novel. It's this screen on your bike. It was so interesting, so
Connect
new.
with people.
But then you do it 3-4 times, and you kind of got the idea, right?
Yeah.
It's the same routines. It's not variable enough. Let alone the fact that it's hard work, right? You're really pushing yourself. So it's that I think was what went wrong, was that they didn't maintain the sense of variability.
Nir, talk to us a little bit about some of the companies you've invested in over the year and how this notion of habit forming had sort of played into your thesis of whether or not a company's worth investing in. If you could give us some examples of where it worked well.
Yeah, it's been amazing. So the book came out in 2014, Hooked, How to Build Habit-Forming Products, and it's been used in every conceivable industry. Education is one I'm super proud of whenever I see a company using the Hook model. A few years ago, I got a call from these young entrepreneurs in Norway building this little app. They showed me the Hook model. I was so impressed. I immediately said, please take my money. I want in, because they showed me how they really applied the book. And today that company's Kahoot. It's the most widely used educational software in the world. It's got, last time I checked, that a multi-billion-dollar valuation. And what are they doing? They're getting kids hooked onto online learning.
So how are they doing that? What are some of the techniques?
Yeah, so they have this really innovative. It's like you get the Hook model. I'm trying to summarize a 300-page book in 20 seconds, but essentially what they're doing is they're getting kids to invest in making these quizzes on their own to share with their peers.
Right.
And so that investment phase, this is really special.
That's great.
Yeah, the investment phase is where you put effort into something to make it better.
Right.
So when you are the person making the quiz, right, as opposed to saying that, when we were in school, it was a pop quiz today, that sucks, right? It's horrible. Here, the kids are making it for their peers.
Right.
And then in the class, they're playing these quizzes. So anybody with kids, under probably 14, I bet you your kids know all about Kahoot. And that's a wonderful example. We only hear about the bad cases. We only hear about Facebook and Snapchat melting kids' brains. I think that story is overblown. But we also need to talk about the good examples of how we can actually use habit-forming technology for good.
Well, and here we are, we're not out of the pandemic, because we often say, on the other side of the pandemic, we're not quite there, but it's certainly very different than it was in the, height of it in 2020. But we're trying to figure out, what trends, what habits that we formed during the pandemic stay with us? Or do you think they just all go away because that was just such a different world?
It's hard to say whether it's better or worse. It's definitely different,
Yeah.
right? So the things that changed, we talk a lot in habit formation about internal triggers. Internal triggers are uncomfortable emotional states that we seek to escape. So every product you use for one reason. And that is to feel something different, to modulate your mood, because all human behavior is motivated by a desire to escape discomfort. All human behavior, even the desire to feel good, is psychologically destabilizing. So when we went into the pandemic, and now we have all these internal triggers of fear, uncertainty, doubt, all of these things that are causing us more internal triggers, what changed? Well, people were glued to the news. They were scrolling their devices all day long. They were constantly looking for an escape from this crazy world that we had back then. And so as the world calms down now, or at least the world never is not crazy, but, but at least this phase is over. We're looking for other ways to deal with that discomfort, to deal with whatever we're handling in life. Same goes with workplace distractions, right?
Yeah.
So people are not getting distracted at home from their kids or from their pets. Now that they're going back into the office, what we're hearing from employees is that they're getting distracted by their colleagues, by their bosses. So the distractions didn't go away; they just changed.
They just shifted around.
But Nir, you did sort of flick at the idea of there can be a backlash to products that are too habit-forming, whether it be a parent saying, as you said, social media is melting my kid brain. So how do you sort of assess that risk when you're trying to decide in a company to invest? Is that risk still there for, say, the big social media, for the Robinhoods? How important is that risk, do you think, to these companies going forward?
It's a great question. I spent a lot of time working on ethics. There's actually a chapter in my book called The Morality of Manipulation, where I talk about all this. But I propose what I call the regret test. And the regret test comes out of my search for how do you make sure that you're ethical when you use these behavioral design techniques? Because as we talked about, they can be used for good. You can help people exercise more and save money and form all these great habits. But how do you make sure you do it ethically? So the regret test says
you don't do it with DraftKings or one of the gambling apps, I assume.
That's a great example.
Robinhood?
Is also potentially a great example. So the regret test says that it asks, would the user do what we have designed for them to do, knowing everything we know? Summarized as, would they regret using our product? Because people aren't dumb, right? People aren't dumb. That if they regret doing business with you, guess what? Not only are they not going to do business with you, they're going to tell all their friends on social media not to do business with you.
Right.
And so that's why it's so important when we use these behavioral design tactics to do what I insist we do, which is usability testing, which we've been doing for decades, to bring people in and see if they regret that experience.
I told you we wish we had like an hour here. 30 seconds left here. Is there some thoughts on the metaverse from your perspective? Like, does that become part of our habits or something that we're going to enjoy going forward?
I think it's way too early to tell. We don't even know what the metaverse is. We don't have even a definition of what it is. I think it's kind of like AI. It's like one of these things that captures the imagination we've been thinking about for so long. Way too early to really start putting down roots, I think.
All right, gonna leave it there. Come back.
Absolutely.
Within your travels, we would love to have you back. Nir Eyal, he's author and investor. Check out his blog, nirandfar.com, joining us here in our Interactive Broker studio. Are you ready for the inflation print?
Oh, I've been waiting all month for it, Carol. We'll see.
It's supposed to be a big one. We're going to be breaking it down, 8:30 a.m. Wall Street time. It does certainly have the potential.
Inflation is habit forming, unfortunately.
It is habit forming, at least talking about it. It certainly is. Have a great and safe evening, everyone. I'm Carol Masser.